Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Charu Chanana, market strategist from Saxo Markets. Charu, great to have you on the show.
Thanks, Brian. It's good to be back.
Now, Charu, on this 14th of March, with a lot of turbulence, we're going to take a look and see how markets have performed over the region, across the region. But we're going to start with crypto markets. Bitcoin is at 24,370. It's up 9.15%. Ethereum is at 1,673. It's up 4.89%. If we look across the regional equity markets, we've got the Straits Times Index, which is up 0.07%, but it really bucks the trend because the KLCI is down 1.25%, Shanghai is down 0.91%, the ASX All Ordinaries is down 1.62%, the Nikkei is down 2.24%, the Hang Seng is down 2%, and the Kospi is down 2.24%. Now, Charu, please tell us why the sea of red, with the exception of Singapore.
Yeah, so I think, there are obviously, Brian, these lingering concerns from the SVB fallout that we saw, last week, end of last week and over the weekend. So I think the markets are still a little bit in a risk-off mode here. And, you probably, if you dig down deeper, I think most of these declines that we're seeing in the broad indices are coming from bank stocks and probably also some bit from the energy stocks because oil prices have been down 2.5% last night and another 1%, over 1% this morning in Asia as well. So I think those are the big drivers here, really.
So with the risk of sentiment, where are investors then parking their money? Because obviously one place they're doing that, and you can see from the rise in crypto markets, is crypto markets.
Yeah, absolutely. I think there is, leaving crypto aside, but, there is a lot of flight to safety at the moment because even though we did see the regulators in the US come up with some measures late Sunday night or Monday morning, if you look at it from an Asia time zone perspective. But I think there are still a lot of unknowns in this game, and we potentially can't say that this will be the end of the fallout from the SVB crisis. I think the market is still a little bit in the panic mode and unable to kind of understand what else could break after the few banks that already did, what else could break because of the ongoing Fed tightening cycle. Like I said, safe havens like bonds, a lot of people are parking their money, taking it out from equities, putting it into bonds. A lot of alternative store of value is coming into focus as well. For example, if you take precious metals, gold and silver are having a good run. Silver was up 6% last night. It's the poor man's gold. So I think that's being favored as well. But like you said, yes, crypto as well, potentially seeing some impact because it is also considered an alternative source, store of value, right?
Now, Charu, you just mentioned this, but we've got to talk about this. How is this going to impact the Fed's rate hike cycle now? It would seem that there should be a shift in thinking compared to what we were all expecting and discussing from Friday.
Absolutely. Coming from where we were last week after Powell's testimony, we've seen a big shift after this financial contagion concerns have spread. So it does complicate the outlook for the Fed's monetary policy a lot from here. If we just look at it for the March meeting next week, we have banks calling right from a plus 50 basis points rate hike to even a 25 basis points rate cut. At this point. But I think my sense really here is that, the Fed has to obviously kind of preserve its credibility, at least, towards the inflation fight that it has been, that has been going on. And it has already responded to the financial contagion concerns. It has already showed that if there were any systemic risks in the system, we don't think there was systemic risk, but if at all, the authorities stand ready to kind of step in and take the necessary steps. So I think if they do not hike rates at this point, it will just send a warning signal that they potentially know something more than what the markets know. It will potentially send a warning signal on what else is to break, or where are the risks in the financial sector. So I think they do still have to continue with a modest rate hike cycle at this point. But I mean, of course, the CPI print, which is due today, will be a big focus for that, and that will also be a key input for the Fed next week. Longer term, if you look at it, like you said, yeah, a lot of rate hikes are being taken off the table. Rate cuts are being priced in aggressively, and I mean, I would just say that it is really going to be a rock and a hard place for the Fed to be in, where inflation concerns haven't really died down and recession concerns are picking up as rapidly as they are. So I mean, it's really hard to call out how they move forward from here. But what is really clear is, in terms of the markets, I think equities will continue to be under pressure, even if recession concerns were to pick up.
Now, Charu, on that note, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.